All right, looks like we got some people signing on, so we'll wait just a second and get the numbers in here, and then we'll kick this off. All right, we're at 12:01, so we're gonna get going here. Welcome everybody. Thank you for joining us at our employer town hall. I love putting these on and sharing all of the good information that we do for our state, and also all of the resources that we have available to employers across our state as well. I'm Kathleen O'Leary. I'm the Deputy Commissioner here at the Department of Labor and Industry, and I get to be the moderator for all of these employer town halls. So again, thank you for joining us. If you're new, just a couple of housekeeping things for all of you. These are recorded. We do put them on our website. Oh gosh, look at that. Abby, thanks so much. So right there in front of you, dli.mt.gov is where you can find recordings of these town halls. Please feel free to go back and use them at your leisure, and suggest that anyone who may be interested to go in and take a look at them as well. We have a chat box that we use as well. I encourage you to use that probably for 3 different purposes. One, to kind of put your name in there and your email address if you're interested in getting updates or information about future town halls. I ask that you put your contact information in there. Also, if you have any questions throughout any of the information that we're sharing here today, throw your questions in there. If we have time, we will go back and answer them. If we do not have time, we'll take a look at them after the meeting, and then try to put the information up on our website at the same place where you would go in to get the town hall meeting recording information. And then the third purpose that we use our chat box is for if you have any suggested topics that you would like us to cover, feel free to throw those in there as well. So we have a couple people working in the background on those. They will put the different links that we are talking about, and I will also try to track those questions that you're putting in there during our conversation too. Then a last housekeeping tip, just a general disclaimer. Sometimes we will provide just some legal information during these town halls, but we want to try to be very careful about all of you. You all have your own individual situations, so we encourage you to seek your own legal advice and make sure that you are applying the information that we are providing appropriately to your particular situation. So those are basic housekeeping. Again, welcome. I'm excited about the topic, and I'm excited about the panelists that are joining us today. We have a really great unit here in DLI, the Research and Analysis Bureau. They do all kinds of amazing good work. They track our labor market information and other occupational information. Where you might see some of their work come out or be distributed out to the public is in the unemployment rate, occupational wage rates, things like that. There's about 16 people that make up that unit. Many of them are economists, and we get to hear from 3 of them today, which I'm super excited about. But also other economists and some research analysis are behind the scenes tracking some really important data, and also distributing it out to all of you in various ways. And they will touch on some of those different ways that you can get access to the different information and data that they are tracking. So with that, I'm going to have each one of them introduce themselves, and then we'll jump into the economic update, which is the topic for this week. So Barb Wagner, would you like to introduce yourself and explain a little bit about your position and what it is you do at Research and Analysis, and also what just makes you so awesome?
Oh, thank you, Kathleen. Abby, I just wanted to mention your need to stop sharing the screen so that I can share my screen. So I am Barb Wagner. I'm the chief economist for the Department of Labor and Industry, and I am happy to be here today talking with you. And I wanted to talk a little bit today about the worker shortage, which we are hearing a lot from employers about. an inability to find workers as we're exiting this pandemic and we're getting our economy going back. And I still can't share my screen. So, oh, there we go. And
Okay, let's have,
there we go.
hey
Are you
Barb,
seeing it now?
can we have Nick and Amy introduce themselves first before you kick off a little bit? Nick Holum, do you want to take the stage next?
Hi, everybody. My name is Nick Holum. I'm the newest economist in the Research and Analysis Bureau. And I started about a year ago, or a little bit over a year ago. So just in time to get my feet under me before the pandemic. So a lot of my research has been in response to the pandemic. And what I'll be presenting today is looking at the long-term unemployed and different barriers that they face returning to employment.
Thanks so much, Nick. Amy Watson, would you like to introduce yourself as well?
Certainly. Thanks, Kathleen. My name is Amy Watson. I'm a senior economist with the Department of Labor and Industry. I've been at the department for, probably close to 7 years now, maybe over. And I've worked on a wide range of issues, including healthcare and education are probably the two biggest things. Today, I'm going to be talking about childcare availability in the state.
Thank you so much to all three of you for being here today. I briefly mentioned it before, but really the Research and Analysis Bureau does amazing work. And if you are not familiar with the work that they are doing, I would highly recommend that you listen to what they present today. It is just a very small nugget of the data and information they are tracking, and they make a huge effort to try to make it available to employers, but they are here at your disposal as well to reach out and ask questions to you, so please feel free to do that. And with Barb, I'm going to kick it off to you now to jump in here and give us kind of a general overview.
Okay, great. And again, thanks, Kathleen, for that. And again, where are the workers? And now I'm off and running in the right place. So as you know, Montana's unemployment rate has recovered from the pandemic, and now we are back down to 3.8%. This is a much faster recovery than we expected, and we're down close to where we were prior to the pandemic. And most employers in Montana are aware that we have had a worker shortage in Montana for quite some time. That's primarily being driven by demographics. And so we are back down into this situation where our unemployment rate is below average, and it's indicating a tight labor market. Now, Montana's economy has recovered much faster than many other states, and particularly the US unemployment rate. You can see it up there on this chart, still around 6%. So it is true that our economy recovered faster than the US, and we are in a different situation with our labor market than other states are. And that's one of the reasons why we have diverged from the rest of the country in terms of our unemployment insurance program, which we'll talk about in a couple of slides. We also have other indications of labor market tightness that we keep a track of at the department. And this slide shows metrics on job openings and how many job openings we have right now compared to the pandemic, prior to the pandemic. The top chart here shows all job openings. That's both ones that are brand new and ones that remain from last month if they did not get filled. And you can see the number of jobs here are higher than it was even before the pandemic. A lot of that is coming from a pent-up demand that has kind of built up over the last year. The bottom chart here showing new jobs, you can see our new job postings are pretty high right now, much higher than they were prior to the pandemic. And part of that is because all of these businesses are kind of reopening and expanding at once. And instead of having that hiring spread out over the past year, they're all kind of jammed up into the most few months, and we're all trying to hire at once. And so that's really driving up these new jobs beyond where you would think that we would be given the opening of the economy. But that's also creating a lot of competition between employers because we're all looking for the same workers at the same time. When we look at how many people are currently on unemployment, it's roughly equal to the number of job openings that we do have right now. And of course, unemployment, people who are currently claiming unemployment is the first place that we can go to find jobs. These individuals want to be working, they want to be engaged in the labor market, and so we can help get them into jobs quickly. Total number of job openings that you saw on the last page is about 17,000. We currently have 22,200 claimants on unemployment for the most recent week of data, but some of them, 4,000 of them, are working part-time. So we're roughly to a 1-to-1 job openings to unemployed individual. That's a little bit lower than what we were prior to the pandemic. Typically we're seeing like 2 to 3 job openings per unemployed worker. So there still is some differences between the pre-pandemic and the current situation. But based on the data we have, it does indicate that it is time to start moving into a different environment where our economy has recovered in terms of jobs and we're actively seeking workers. The tight labor market has led to a lot of concerns about the unemployment insurance program and the amount of benefits being provided for them. Throughout this recession, Congress has provided additional unemployment insurance benefits as a stimulus to our economy. And particularly last year, that stimulus was very important to our economy, but it has resulted in workers can receive more unemployment insurance benefits per week than what they would have earned as when they were working. And this chart shows that wage replacement of benefits. So what percentage of their previous wage is replaced by unemployment insurance benefits. And this is for Montana data going back to 2020. And our normal periods are right here. That's about at 50% typically around is replaced your wage. During the pandemic, when we were issuing the $600 payments, that shot up pretty high, about to even up to 160. It's a little less, we're a little higher in terms of the replacement rate than the rest of the nation, partially because Montana's wages tend to be a little bit lower than the national wages. So nationally, it was about at 140 during this time. But after the expiration of those $600 payments, it dropped back down to the normal 50%. And then at the start of 2021, we're now having the $300 payments. With the $300 additional payments, we're right around 90 to 95% replacement. So that has changed the situation a little bit, but it is also true that it depends on what the wage level is of the worker, whether or not their wages are being fully replaced. The average, of course, like we saw on the previous slide, was around 85%, but it depends a lot on what the wages of the worker are. This breaks out that exact same metric of wage replacement by the previous wage level. And for workers who were previously earning less than $40,000 a year, they are receiving benefits equal to the amount that they were earning prior to the recession. And then those making less than $20,000 a year are making more or getting benefits more than they would be earning if they were back in their previous job. So this data does suggest a couple of things. It does suggest that there is reason to believe that the unemployment insurance program is competing with businesses for those workers, probably most acutely down at the lower wage levels. For higher wage workers, certainly they're making a lot less receiving unemployment benefits than they would be if they returned to work. So that is one of the reasons why the governor has chosen to end the pandemic unemployment programs a little earlier than the nation will be ending them. I'm not going to go through the different types of programs that are listed here. There's a lot of acronyms. It's just safe to say that our unemployment programs will be back to what would be regular, what we were having prior to the pandemic, and all the pandemic related benefits will expire. That does have some negative consequences of not having additional stimulus in our economy, but the positive benefits are that there'll be more, the unemployment program will not be distorting the market for those low wage workers. And I think that given the data that we have, it does suggest that the data does suggest that we're probably fine moving into that new scenario where the market is supporting our own economy. The governor also announced $1,200 return to work bonus for those currently on unemployment who need to return to work. There are some, when you've been on unemployment for a long time, there are some concerns that sometimes it's harder to get those who have been long-term unemployed back to work. And Nick Holum's going to be talking about that next. So that return to work bonus is important, not just as an incentive, incentives matter, but it is also might be able to pay for some of those concerns that come up with the long-term unemployed. And Nick will be discussing that later. So I'll leave that right there. So we've gotten a lot of questions about how many workers are affected by the governor's decision to end the unemployment insurance programs early. This chart shows how many individuals have been receiving unemployment throughout the pandemic since 2020. And in the blue, you see the regular programs. So regular continued claims and initial claims are just the first week that they are. And then the pandemic related programs are shown here in red. And if we draw those out based off the current participation levels, then the projected number of people who will continue on the unemployment insurance and still be eligible after June 26th will be about 7,400 workers. That will get us back to pretty close to where we were prior to the pandemic, still a little bit higher, but fairly close. And then there will be about 10,600 workers who will no longer be eligible out there actively seeking work and looking for wage replacement pretty quickly. So that's a great target for businesses who are seeking workers. And just one quick thing to mention, these are slightly lower than the estimates when the governor first announced his program, partially because just in the last few weeks, we have seen many people drop off of unemployment, probably because our seasonal economy is coming back on, and we're seeing a lot of those summer seasonal workers going back to work. So. That being said, we've made some changes and they probably will result in an easier time hiring, but those people who are unemployed are, of course, right here included in the unemployment rate. And if those individuals all went back to work, what happens is that unemployment rate goes down, right? So we're already in a pretty low unemployment scenario. As those individuals get back into those open jobs, our labor market actually continues to tighten. So what's the deal, right? Like that's not the only answer. And the other part of the answer is the denominator here of the labor force. The labor force refers to everyone who's employed and looking for work. And basically there's a lot, the answer to this question is that it's not just about the number of people who are on unemployment insurance. It is also the case that a lot of people have chosen to withdraw out of the labor market and choose not to actively seek work, choose not to be working during this pandemic. And it's a big problem that we need to solve. This is our labor force participation rate is really important to making sure that our economy can continue to grow in the future. And the declines that we've seen in the last year will be an important challenge for us to face as a state in the future. This chart kind of shows how we have declined in our labor force over the last year. It shows both employment and the labor force going back to January 2020. This black line at 100% represents what it was in February of 2020, so before the pandemic. And you can just see how employment and the labor force dropped right away during the closures. Employment, both total employment, which includes self-employed, and payroll employment, which is more wage and salary jobs, improved back up and is recovering pretty well. But unfortunately, our labor force have just slowly gone down and down and down. And we're now down around 10,000 workers who are missing from the labor market compared to where we were in February.
So Barb, I got a question for
Yes.
you there. Is that only happening in Montana, or are we seeing that across the country?
Across the country. And I will speak a little bit more to that on this slide, where we talk about why the labor force has declined. And the answer to that is mostly because there's some workers who are concerned and have higher risk of COVID exposure that have left the labor market. We have seen that both here in the state and nationally. And then second, it's been very, very challenging for parents in the last year to deal with all the uncertainties that come with distance learning, learn from home, and childcare that seems to be open some weeks, not open the other weeks. And also, of course, parents need to be home when their kids are exposed. So even now that schools are going more back in and childcare is coming back in, there's still just so much uncertainty in their schedule. So we've seen a lot of parents have to pull back. On this slide, I should show the statistic that Amy is going to be talking about a little bit more later, that 55,000 Montana parents have reduced work hours during the pandemic. Now, this isn't, a lot of those parents are still in the labor force, right? Many of them are just pulling back their workforce. I believe Amy will share with us the number of 25,000 who have actually pulled out of the labor force completely. But that's a big deal. That's a lot of people, to about 10% of our labor force, that are just not there to be able to contribute to our economy in the same way that they were in the past. So, and again, the other problem I mentioned is the risk of COVID exposure. There is also individuals, they probably have, higher risk health conditions, or they're older workers who have pulled out of the labor market because they're concerned about contracting COVID. And that problem won't be fixed until we have widespread vaccinations. In particular, and Nick will show this statistic as well, but there's about 10,000, we estimate there's about 10,000 Montanans that currently have pulled out of the labor market for that exact reason. And if you put yourself in that shoes, we actually have a lot of older workers who work part-time in Montana. And this is people who may or may not be retired otherwise. And instead of those individuals, working part-time in our economy, they have chosen to get out. And that's probably because they're in fairly low wage or part-time jobs that is not necessarily, the risk is greater than the reward in this scenario. And again, incentives matter. So that's something that's important. And then the last thing I'm going to mention is on this slide, is the accelerated retirements. We did see some changes with the timing of retirements in the last recession. We don't have great data on whether or not that's happened during 2020. We will soon, but given the stock market and the conditions, it's probably true that when people lost their jobs during the last year, some of them may have just chosen to retire and take off in their RV and enjoy instead of actively seeking work afterwards. I've mentioned most of these solutions already. Widespread vaccination certainly is important. And childcare and schools are something that Amy's going to be talking about. And then I also want to mention the last one. We've been experiencing these worker shortages for a while, and the Department of Labor has a lot of programs that we have that have worked to help employers find more jobs. That includes apprenticeship. There's also, helping employers engage with their local schools in order to find greater training. And then we always recommend things about like building your pay system to help with retention or provide non-monetary benefits. The last thing I'm going to, and I also think remote work provides a lot of opportunities for us in the future as well. The last thing I'm going to mention that is affecting the labor market right now as well is that wages have grown a surprising amount in the last year. And a lot of employers who haven't been actively hiring in the last year may not realize how much wages have grown. And it's very unusual for wages to be growing during a recession. But in fact, that did happen this year. This chart shows the total amount of wages paid out in the state and payroll jobs. So if you put everybody's paychecks in a great big pot, this shows how much that pot gets bigger each quarter, right? And you can see the red line as a trend line, the blue line is the pot of big wages growing, and we are pretty high above trend this year. The total wage amount grew at 4.9% total. That's about $600 million above where we were last year. The average wage had even higher increase. That's at nearly 8%. Part of that is driven by the growth of wages in jobs that were retained throughout the year. The other, we did also have some upward pressure on that average wage as low wage dropped off, which pushes up average wage. But that the part about like nearly every job in Montana still has had wage growth throughout the time. That's very unusual for a recession. And so it's something that employers need to consider as they move out there to hire more workers.
I got a couple questions on this slide because I find this so fascinating. Barb, can you give us just an idea of what we would normally see, or how does 7.8% increase matched what we have seen in the last few prior years?
Yeah, 7.8% wage growth is crazy high.
Mm-hmm.
That's my official economist description, crazy high. So on the last couple of years, we've had wage growth of 2%, 3.5%, 3.4%, and that's actually been pretty good. Montana is one of, I think we rank 6 of fastest growing wages over the last 10 years, ending in 2019. 2020, I did a check against other states, and based on the data that we have so far, Montana is definitely in the top 10 states for wage growth in the last year. It is somewhat unusual that we had such strong wage growth. I was checking about our neighbors and stuff just even earlier today, and Wyoming and North Dakota both had a decline in their total amount of wages paid out. Montana's grew, and it does seem about a third of, I would say 40% of states seem to have had a loss in the last year. It's not really clear why some of us grew and some of us didn't, but I will say it's quite unusual. And I do think part of that is driven by the PPP loans that did allow a lot of employers to continue to pay. And then the second thing I would suggest is probably driving it is for many industries and jobs, working from home saves a lot of money. Workers are more productive. You're saving on travel costs. There's just, worker productivity has increased a lot. And when a business experiences worker productivity, they see that as a gain in profits, and part of that goes to workers and part of that goes to the business owner. So I think both of those two things are probably what's driving this really strong wage growth this year. But again, it's something I'm sure economists will be arguing over for the next 10 years. So
yeah, it's crazy. It's a crazy stat. One other thing I would like you to just clarify for the people on today, where do UI benefits, are they included in this stat, or how do they figure into our average wage calculation?
So unemployment benefits are not included in this number. This is just wages paid out to workers who are actively working. There are, like I did mention, the PPP loans, and there are some employers who continued to pay their workers throughout that shutdown period. So that would be included in here. That was considered a wage. So it's kind of what you would be reporting for your employee on their W-2. That's what's on this slide.
Yeah, I think sometimes we've heard this stat, but I think there's a misunderstanding about the fact that it might be the UI benefits that are driving this increase. But
nope,
it has nothing to do with that.
Crazy. It does not include any benefits. It is crazy wage growth.
All right, I know you're coming to the end of your presentation here, Barb. I do have a couple follow-up questions for you. I know on one of the slides, it referenced our job tracker dashboard. Do you just want to throw out just a little bit of information for the employers that are on today, what that is and why they might want to take a look at that?
Yes, thanks for mentioning it. I normally do, but I missed my sales pitch today. So thanks for letting me catch up on that.
I got your back, Barb.
Yeah, thanks. We do have a job tracking dashboard, and I would bet that the address for that is going to be in the chat box quite soon, but it's at lmi.mt.gov, which is right here on the screen, but then a /home/job tracking. You can find it from that page that's shown right there. What it is, right at the start of the pandemic, we wanted to create a dashboard so that everybody can go and see how the pandemic has impacted their local economy and the state's economy, and also compare their county to other counties or Montana to other states. Also on the job tracking dashboard is a lot of information about how much has been provided in unemployment benefits to various demographics, and also to the county. For example, if you want to go look up how much Beaverhead County has received in unemployment insurance benefits during the pandemic, you can find out on that website. So we also have the job postings dashboard there, and we continue to update that job tracking with data that we feel is important to the Montana economy as we continue to recover. So it's a great place to go check out how our economy is doing comparatively, and what are the important stats to be watching right now. We put that up on the dashboard.
Yeah, it's a great resource for anyone that's listening. I highly encourage you to go in there and take a look at it. Barb, there's a question in the chat box. How does Montana average wage compare nationally?
So we won't know the 2020 data for another couple months for what our ranking is. Typically, our average wage calculated in this way using this particular data set does rank pretty low. We're at 47th. Usually, I don't know if we'll move up to 46 this year or not, but it does tend to be a little bit lower. However, when you use other metrics, for example, when you use an hourly wage, we rank a little bit better, usually around 40 or 42, partially because we do have a lot of workers that work part-time. And that's an interesting stat because it doesn't reduce the number of people that are working full-time. We just have a lot of people who, instead of not working, are working part-time. And I think those are probably the people that dropped out of the labor force this year. So they're an important part of our worker supply. And then also I want to mention that Montana also has a high rate of entrepreneurialism, which or people holding some type of investment income in addition to having a payroll job. And when you calculate that type of income in with the calculations, we rank about 35 or 36. So it kind of depends on what those statistics you're looking at. And all of those are important considerations in the economy. The average wage, and we pay very close attention to wages because in many ways, that's the way that leads to increased economic mobility. It's easier to, like the saying goes, it's easy to make money when you have money. And so that's why wages is important, is it's a way that people who do not have investment income and don't have any assets, wages are really the only way that they can, achieve the American dream and move up the economic mobility ladder.
Nice, thank you. You also touch on, before I hand this over to Nick to dive into the long-term unemployment, would you touch on a little bit on where you get your data for us to maybe determine the UI rate, or how do we determine labor force numbers? Where are we getting the information that we're reporting on?
So we So the labor force number is a particularly interesting one. We get that data from a household survey that includes 1,400 Montana households every single month. It is conducted nationally. And so every state gets the same questions. That allows us to compare apples to apples across other states. Also included into the unemployment rate calculation is a survey of 3,600 Montana businesses every month. Again, same thing, nationally, same standards, so we can compare apples to apples. And then the unemployment insurance claims also go into that data. And then we come out with an unemployment rate that's modeled from those 3 data sources.
Nice. Awesome. Thank you for that. Yeah. All right, Nick, let's hand it over to you. What do you got to share with the group?
All right, let me get my screen up here. Okay, so I will be presenting some research I've conducted on the long-term unemployed in Montana. This is all going to be information that's available in an Economy at a Glance article that will be released this Friday. So if you're interested in following those articles, you can go to lmi.mt.gov and subscribe there. So first, just a technical definition of the long-term unemployed. These are people who've been unemployed for 6 months or longer. And so there's a reason we care about that unemployment duration is that they can have loss of skills over that time period. They can have loss of work connections that might help them get their next job. And then they can also, under normal circumstances, experience material hardship, even when they do qualify for UI. That typically doesn't replace their previous wages completely, but during certain times during this pandemic, during the $600 payment and the $300 payments, that has replaced for some wage groups most of their wages or above their previous wages. So hopefully that last piece will be less of an impact. And then from the employer's perspective, there can also be discrimination against workers who've been long-term unemployed. This study from the Quarterly Journal of Economics basically sent out resumes with the exact same information and just varying the duration of unemployment, and found that workers who'd been unemployed for 8 months or longer were about half as likely to get a call back as those who just become unemployed. So that could be because employers know that they've lost some skills over that time period. It could be because that unemployment duration signals something about that worker, about their productivity. And so it might just be that employers prefer those who've just become unemployed. And then a little bit of perspective on the 2009 recession. About half of the long-term unemployed during the 2009 recession had family income decrease of 40% or more. And a third of the long-term unemployed stopped looking for work after 21 months. So it's important to re-engage those workers so they don't fall out of the labor force altogether. But hopefully that first point about the 2009 recession is going to be less true about this recession. And so, so far, looking at from 2019 to 2020, we actually had a per capita income increase over that time period, about $10,000. And that was largely due to those government payments, the enhanced UI benefits, and the economic impact payments that we received. And we've already seen, at least nationwide, that those UI benefits reduced financial hardship that people experience. So reduced likelihood of reporting food insecurity, of reporting being behind on mortgage or rent. And so, but there was also the work disincentive effect of that. One study from the Federal Reserve Bank of Kansas City estimates that those enhanced benefits likely increased the unemployment rate by 3.7 percentage points from March to the end of the year. And that's a nationwide figure. But they also point out that that those enhanced benefits likely reduced the rate of death as well. So there was some trade-off between the economic damage and the health damage that was occurring. And then there's the disincentive of the virus risk itself for a lot of people who might be more at risk of serious impacts of the virus. At least in March of 2021, about 10,800 Montanans reported still not working due to that risk of the virus. So as vaccinations increase and cases stay low, potentially those workers will feel more comfortable returning to work.
I do have a question for you, Nick. I'm not sure you're going to have the answer for it or not, but on that prior slide where you say that benefits increase the UI rate by 3.7 percentage points, that's nationwide, right? So do we know what
Yes.
do we know what that is in Montana? Or are we able to break that data down?
We don't. Right. Yeah, that study is just a nationwide one. So
Okay, perfect. Thank you.
So looking at this graph shows the level of monthly average of unemployment by duration, so short-term versus long-term in blue. And then we have the share of unemployment that's long-term unemployed. So we can see before the 2009 recession, we had a pretty low level of long-term unemployment. In 2007, it was about 2,000 people on average per month that were long-term unemployed. And then we hit the trough of the 2009 recession in 2009, but you see in 2010, that's where long-term unemployment spikes. So as those people got laid off in 2009, they stayed on unemployment. And then you can see into the recovery, it took a while for that long-term unemployed number to come down. We actually didn't reach the 2007 level until 2019. We were back at that 2,000 people per month. And as of this year, this preliminary estimate had us at 5,000 people per month who are long-term unemployed. But we got to remember that most of the people in 2020 were laid off in April and May. So they didn't become long-term unemployed until September and October. So they don't really draw up that average until later. And possibly into the next year, that number would go up even though the total unemployed goes down. So there were a few changes to UI policy that allowed us to see long-term claimants. Under normal circumstances in Montana, people qualify for 28 weeks of benefits, but because of the CARES Act and the pandemic emergency unemployment compensation, that extended the period of time that people could claim benefits. And so we're able to observe more of those people in our claimant data. And so this graph shows the total number of claimants by month that were long-term in that month. And so you can see total claimants actually spiked in April and May, but long-term claimants spikes in September and October as those people stay on unemployment. And these people can also be working. So they can be just underemployed and working a part-time job that doesn't replace their wages fully. And so they're able to claim partial benefits. But from October onward, that number stayed above that 20,000 level of people who were long-term claimants. As you can see, in the black there, that's the share of claimants who are long-term. That continues to go up. So even though claimants in the first 3 months, total claimants were going down, the long-term claimants were staying around while the short-term claimants were going down. So just demographically, our long-term claimants have tended to be women, and women typically actually make up a minority of total claimants. So they made up a minority in 2019, but they made up 50% of our short-term claimants and 52% of our long-term claimants. And that probably goes to something Amy's going to speak about in a little bit about the lack of childcare in Montana. So we already had scarce childcare before the pandemic, and the pandemic with daycare closures and school closures just exacerbated that situation. And so that probably drew more women to claim for a longer period of time.
Hey, Nick, can I jump in here? I know you kind of alluded to it, but normally, what do you normally see as the percentage between men and women? Normally, it's more males that are on our unemployment claims. And can you talk about that a little bit?
Yeah, normally it's more males because of the construction industry makes up a large number of claimants, and that they sort of have that influx as seasonal workers get laid off in the winter. And so that's typically why those claimants tend to be male, because that's a male-dominated industry.
All right, perfect, thank you.
Long-term claimants also tended to be older than short-term claimants. That could be due to a couple different reasons. Could be due to that they're at increased risk of serious health consequences of the virus. So they're just more likely to stay out because of that. They could be more likely to stay out because they don't want to re-enter into an entry-level position, so they might want to wait around for a better job match. They also have typically more money in savings, so potentially they could sustain themselves even while not getting their full wages replaced. But long-term claimants also tended to be lower wage. That goes back to what Barb showed earlier about more of their wages being replaced in lower income groups. And so under normal circumstances, without the enhanced benefits, the max benefit amount in Montana is $552. So that was about $1,100 with the $600 payments. And so as you got into those higher income groups who are getting a smaller share of their previous income replaced, potentially if they can't, or if they don't reduce consumption, there's more pressure for them to find reemployment more quickly. And there's just more incentive for lower wage workers to stay on unemployment. And then some of our, this is the median duration by industry. PUA had a much higher median duration than a lot of the industries in regular UI. We can't really separate out what industries those workers would belong to. They'd be self-employed and gig workers, but that potentially they're making lower wages if they're gig workers. And so that could contribute to a higher median duration. For some of our seasonal industries, construction and agriculture actually makes up a small share of our total claimants, but they do have a higher median duration. Construction typically makes up a larger share, but the leisure activities actually made up the largest share of claimants this year. And leisure activities, that could be, again, a lot of those workers are lower wage workers, so there's more incentive for them to stay on unemployment, but it also could be due to changes in operations. So if restaurants are doing takeout and not doing table service, potentially they need fewer workers. And so some of those workers, at least during parts of the pandemic, maybe couldn't get rehired. And then for our industries at the bottom end, we have some industries that were less impacted by the pandemic. So manufacturing, financial activities, workers who were laid off in those industries had shorter claim durations, and we assume returned to work more quickly.
It'll be really interesting to see what the self-employed individuals do as these programs are ending, right? Because they're not normally a population that are eligible for UI benefits. And so it'll be interesting to watch and track how they engage in the workforce if they continue with the entrepreneurial spirit of many of the Montanans and continue in a self-employed capacity or jump into the workforce as a worker. So I'm interested in watching that play out.
Yeah. So moving forward, some of the things that will help workers get back to work, of course, the back to work bonus will certainly encourage workers to return to work. The UI benefits ending in June 26, or not UI benefits as total, but some of the enhanced benefits will certainly incentivize people to return to work. And then for those workers who are at higher health risk, certainly vaccinations becoming more widespread will make those workers feel safer to return to work.
Yeah, thank you, Nick. I appreciate all of this information. And for anyone that's on today who might be on long-term unemployment, or for any of you that may know any of them, because we do have a lot of Montanans on long-term unemployment right now who have not been in this position before. This is a new situation for them, but they will certainly feel the effects of what long-term unemployment does. So like Nick was talking about, the loss of skills, maybe some bias in the workplace as they're trying to re-enter the workforce, or even just maybe experiencing some financial hardship because of what the last couple months have been like. I encourage any of them to reach out to their local job service offices who can help them match them up to employers who are really begging for workers right now, but also help them skill up. There are multiple programs that we have available through DLI, and I know that Scott or Mike can put the website in the chat box. There's the Incumbent Worker Training Program. There's our apprenticeship program, JMG as well. that can assist not only employers that are looking for workers, but match up very closely with either current workers that need to skill up or those that are on unemployment right now and looking to re-engage in the workforce, and how to make that that transition just a little bit easier for all of them. So encourage them to take a look at that website and avail themselves to all of the resources that we have available to all of you. So Amy, I'm going to hand it off to you. We have talked a little bit about unemployment and how the governor has worked to incentivize the people that are on unemployment right now to re-engage in the workforce. And Nick has talked to us a little bit about what some of those stressors or some of those concerns might be for some of them that are on long-term unemployment. But there are other barriers, and we've seen numbers decrease in our labor force. And some of the reasons are either like an accelerated retirement or childcare. So Amy, would you touch a little bit on why that seems to be a barrier for getting people re-engaged in the workforce?
Certainly. Thank you, Kathleen. So my name's Amy Watson. I'm an economist with the Department of Labor, and I'm going to be talking a little bit more, as Kathleen kind of teed up, about the impacts of childcare or a lack thereof in Montana. So in the state, childcare is a workforce issue. Let me see if I can scroll forward.
Is that working for you, Amy?
No, I can get it, but let's see if I can find another way. No, it looks like it might be frozen.
Amy, did you try
No.
your up and down arrows? The left and right
Mhm.
arrows. Okay.
Yeah. So
That's
I'm gonna,
showing. That's showing, Amy. Slide 2 is showing right now. Childcare is a workforce issue.
oh, it's showing for you. Okay. I don't see it, but I can click through anyway. So I'll just keep moving. So
I want to
childcare.
just touch on some of your bullet points.
Okay, yes, of course. So
Okay.
childcare is a workforce issue in the state. Right now, we anticipate, based on 2019 data, that about 6% of our workforce relies on some form of childcare in order to remain in the labor force. Yet only about 47% of our licensed childcare providers meet only about 47% of estimated demand. And so that leaves a big gap in terms of workforce development when we're talking about re-engaging these Montana parents in the labor force. And this is an issue that's existed in the state, as both Nick and Barb mentioned, for a number of years prior to the COVID pandemic. But of course, as the pandemic hit our state and we're trying to limit the spread of COVID, a lot of our childcare providers did close as a result, albeit temporarily. So we see a significant variation in our workforce or in our childcare availability by county. Can you see that slide now? I clicked.
No, actually,
No.
it's still on the front one. That's okay. You can still touch on the data.
Okay. I will stop sharing, and maybe if Barb or Abby can share instead, and then click through. But I will just keep talking. So we've seen a significant variation in our childcare capacity by county. There are 8 counties in Montana that don't have a single licensed childcare provider, and about 77% of our counties are considered a childcare desert, where licensed capacity meets only about a third of estimated demand. Typically, we see that capacity is more limited in our rural counties and more readily available in our urban counties. So if you look at that county map, you can see that in Yellowstone County, in Missoula County, Lewis and Clark, Cascade, Gallatin County all have some of the higher rates of childcare availability, although none of those counties are meeting 100% of estimated demand. These data are as of July of 2022, so once the pandemic had started. In Montana, you can go to the next slide. We saw a drop in licensed childcare capacity in April as a direct response to the stay-at-home order. We saw about 43% of providers close in order to help limit the spread of COVID. But childcare providers were able to reopen relatively quickly, as they were able to adapt and accommodate with the help of federal funds to increase their childcare availability. So only about 14% of providers remained closed in June. However, a number of Montana parents still are subject to unreliable or inconsistent childcare. So we estimate that about 25,000 Montanans are unable to return to work because of a lack of childcare or the need to monitor at-home learning. So that speaks to the number of people who have had to, in many cases, drop out of the labor force because of inconsistent childcare. In addition, about 55,000 Montana parents are working reduced hours. So these individuals, as Barb mentioned, are still engaged in the labor force, but they've perhaps had to work 30 hours a week instead of 40 hours, or they have to intermittently take entire weeks off of work. For example, if their childcare facility has a positive COVID case, in many cases, that facility will need to close for a couple of weeks. And this happens often suddenly without much notice, leaving parents with difficulty finding backup childcare. So in all, we anticipate, or we estimate, about 10% of our labor force is subject to this inconsistent childcare availability. You can go ahead.
So Amy, I'm going to interrupt because we're getting close to the hour. Do you want to jump down to your last slide that talks about some of the things that employers can do to, or that have done in the past and that they can think about doing as well? But the rest of your slides will be on our recording, and all of these slide decks will be listed on our website as well, so people can go back and reference them.
Yep, so that childcare benefits slide, basically just to give an overview, because this has been an issue for such a long time, the Department of Labor and Industry partnered with the Federal Reserve Bank of Minneapolis to conduct a survey of Montana businesses, specifically about the impact a lack of childcare has on their ability to recruit and retain a qualified workforce. And so I just wanted to say thank you if any of you participated in that survey. It's been really beneficial in terms of informing us about the impact that a lack of childcare has had on businesses. And we do have the full report with all of that available on our website. One thing that we asked about in this survey was what employers did in order to help overcome these challenges. And so we asked about the flexible work arrangements, which was the most common thing that employers were able to implement, the benefit that they were able to provide their employees to help them balance their work and family life. About 75% of employers offered some type of flexible work arrangement, with the most common type of arrangement being flexible scheduling, allowing their employees to work 4/10s or outside of traditional business hours. Of course, this survey was conducted in the first quarter of 2020, so prior to COVID. And since then, so remote work or telework made up a relatively small portion of the types of flexible work arrangements that businesses had implemented. But since then, we've seen that increase significantly over the last year. We also saw about 13% of our businesses provided some sort of paid parental leave, which is leave in addition to vacation or sick or PTO leave, specifically designated for mothers or fathers at the birth or adoption of their child. Mothers typically had more access to leave than fathers did, with 7 weeks on average compared to 4 weeks. And paid parental leave is really effective at helping reduce demand for infant care, which is the most expensive form of care, and it's also the most undersupplied type of care in the state. It's most difficult to find. In order to help offset the cost of care, many employers offered, about 15% offered, a dependent care flexible spending account, which is money that can be set aside specifically for paying for childcare, or in some cases elder care as well. Those typically were capped at $5,000, but over the course of this, because of, I believe it was ARPA, increased that number to a little over $10,000 for 2 people. So if a single parent could put away about $5,000, 2 parents can put away about $10,000. And the average cost of childcare in the state is about $7,900 for 0 to 5 years old. And then if you're looking specifically at infant care, it's just under $13,000 a year for 1 infant in Montana. So that can significantly help offset the cost of care, offering those plans. And then just really quickly, I know we're running up against the time here, but there was a number of businesses, about 4% offered instituted family-friendly HR policies that helped connect their employees to local resources like their childcare resource and referral agency to make sure that they were able to access care and had all the benefits available to them that were available through their local communities. Some provided on-site childcare. There was backup childcare available for individuals who maybe had a sick kid, or during COVID, if their childcare provider has to shut down suddenly, they may be able to provide backup care. There was also a few businesses in the state that offered a co-op model where a number of businesses came together to operate one childcare provider that was available for the employees of all of the participating businesses. And then some businesses did reserve spaces at local providers that already existed in their community. And those are different benefits that can help increase the access to care. So I would encourage you to explore these different types of benefits and providing them to your employees if you're really struggling with recruitment and retention of particularly parents who have younger children. So.
Yeah, I appreciate all of the information, and I'm sorry to have rushed you, Amy, because it's really good data. I know that the link for the article that you worked on was placed in the chat box, but it certainly is a barrier to workforce. So when employers are trying to find workers, and I think the governor has done a really great job of incentivizing people to get off of UI and bringing a whole large number in to the workforce. And Nick touched on some things employers should be aware of for people that have been on long-term unemployment, helping them get back into the workforce. But things like this, like housing and the cost of transportation and childcare, are other really like large ticket items that we think about that are systemic, and how do we deal with them as a state. And there has been some ARPA funding. I know DPHHS is doing good work over there and trying to figure out the best use of resources that have been allocated to childcare and how to make that work, and hopefully that will benefit employers as we go forward. So certainly watching that and figuring out how we fit into that equation as well. I do want to thank Barb, Nick, and Amy for sharing their data today. I encourage employers who are looking for workers, and it sounds like a whole lot of you are, to reach out to our job service offices. They can get information on the Return to Work program. We are actively reaching out to those claimants as well and trying to incentivize them and inform them of what that program looks like. But also reach out to job service about some of the other programs we have available, grants and training opportunities that we have that we can help skill up some of these people that are leaving unemployment, as well as working with our different state agencies. We're working with Commerce and Ag and HHS to figure out how to use these ARPA dollars to benefit all of you as you are trying to address some of the workforce shortages that you are seeing. So again, I would like to thank Barb and Nick and Amy, who gave you just a really small taste of the data that they dive into on a daily basis. Please take a look at their website. It's lmi.mt.gov. There is a ton more information there that you would find useful. And we will be placing this recording on our website, so you can go back and take a look, and all of these slides will be there as well. So thank you to our panelists, and also to the people behind the scenes that are making the chat box works for us. And if you're interested in further information on these employer town halls, go ahead and stick your email in the chat box. We'll leave it up for just a minute so you can do that. And hopefully you can join us next time. Thanks so much, everybody. Bye-bye.